That's why the airlines have been saying, quite simply, basically, that they have no problem selling business class tickets to high-income households, but they're having some challenges selling business class tickets, economy class tickets to low-income households.
Okay.
Because low-income households, the bottom 20% of the population, people who make less than $25,000 a year, their savings cumulatively as a group today is literally in dollar terms exactly the same as where it was in 2019.
So what you're saying is people with 25,000 and below have no more savings than they had in 2019.
Exactly, in nominal terms,
and people at the upper end have $1.5 trillion more savings.
Yes.
That's an enormous disparity.
And that's because people at the upper end have been benefiting from three things, benefiting from stock prices going up, home prices going up, and people at the upper end also own fixed income. So when the Fed still has interest rates high and still talk about raising interest rates, that means that the cash flow you get as a high-income household is at the highest level in fixed income that it's been in decades. That means that high-income households are not only making money on their stocks and on their home prices, but they're actually also making money on the cash flow that they get because some Apollo funds pay like 8, 9, 10%, and those returns you can get in private credit, public credit, and fixed income is basically at the highest level we have seen literally in 20 25 years. So for that reason, high-income households continue to benefit both from asset price inflation and also from cash flows being very, very strong. So this is the first answer to your question, namely when it comes to wealth, there is a K-shaped situation, and that continues to, the legs are just getting longer in the K, if you will, because the stock market obviously continues to do well, and the cash flows continue to also do well. There's now also a K-shaped situation, secondly, in wage growth. The Atlanta Fed has wage growth measures across income distribution, and people at the bottom are seeing lower wage growth relative to people that are in the middle and high income distribution. So that means that the K-shaped situation is not only in wealth, it's also in income growth. And finally, there's also a K-shaped situation when it comes to inflation. The New York Fed has measures for inflation across income distribution, and people at the bottom of income distribution then spend a bigger share of their consumption on food, energy, and housing, and these have seen a much bigger increase in inflation. So people at the bottom are also facing a higher inflation rate relative to people at the top and in the middle. So from that perspective, the answer is there's a K-shaped situation for wealth, there's a K-shaped situation for income growth, and there's a K-shaped situation for inflation. And lastly, if you look at stock prices for baskets of luxury names in consumer spending have outperformed over the last several years a basket of retailers that, of course, cater to discount or value names. So that's why this discrepancy, you can look up on your screen every single day, what is the difference? And it just continues to be the case that high-income names and those who cater to high-income names continue to outperform discount retailers. So that's why the K-shaped situation continues to be a major theme in the outlook at the moment.
Okay, so grant that. What are the implications for the economy?
So the
long term for this, because this is not a trend that's going to flippity flip in one day. So this is long term.
Absolutely. The net effect of the K is that in aggregate, the top 20% of consumers, they account for 40% of consumer spending. The bottom 20% only account for 8% of consumer spending. So in aggregate, total consumption is actually still okay. If you look at the weekly data from Redbook for same-store retail sales, so that means Redbook goes out once a week and asks retailers, what were your sales this week relative to the same week a year ago? And that's still holding up very nicely. So that means that in aggregate, despite the K getting wider and wider, you're still seeing in aggregate, because the bigger part of the K still has such a big weight, that in aggregate, the consumer is actually still doing well. So that's why the answer to your question is, if the K continues, it almost instead becomes a political discussion. I mean, what does it mean when you have a bigger and bigger share of the lower leg of the K that continue to face headwinds, not only because of the three dimensions I mentioned with wealth and income and inflation, but there's also the added issue that when you look at the delinquency rates on auto loans have been going up, the delinquency rates on credit cards have been going up, and the delinquency rates on student loans have also been going up, because there are a lot of households in the bottom and the middle of income distribution that also are facing higher interest rates because they have this problem that they have now also not only a K-shaped situation for wealth and income and inflation, but also because of this issue that delinquency rates are going up, especially for people in the middle and the bottom of the K.
Sounds pretty grim.
So that means, to your question before, that it means that the share of households that are getting impacted on the lower leg of the K is unfortunately just growing and getting bigger and bigger. And that's, of course, why this becomes a political discussion. Well, what do they do?
The worse it gets, the bigger the political discussion.
Because then they become a bigger part of the population, and you can then ask who do they vote for and what are they doing. And this becomes ultimately the risk, namely, meaning risk from an upside downside, but what is exactly the outcome when you have that the K-shaped situation is unfortunately continuing.